everybody in the entire financial world is short upside calls on crypto. I run one of the many businesses I run is a fund-of-fund business in crypto, investing in digital asset hedge funds. We can see by the performance most people are underweight. If you look at the equity market in technology stocks, the big players like Coatue, the biggest hedge funds in the world in technology, 75% cash. And then you see on crypto Twitter and FinTwit, people raging about the market going up. They're raging because everybody expects a leg to new lows. It's the story, and Yurian will talk about it, about are earnings going to be taken down? And I've gone back through history. I think the probability is that even if we do have a recession, for some reason the market's not going to make a new low, because I think once you take the inflation fear off, that helps a lot, because that's the big bogeyman. And the next one is rates. And as rates start coming down, that's the other big bogeyman. And that can really give things traction. And it's a very complicated story in corporate earnings right now, because nominal versus real earnings make things really confusing. So I just have a sense that I did a Twitter poll and 25,000 people answered. And I said, how many of you think there's a new leg lower? 70%. I said, how many of you are underweight? 75%. I'm like, okay, there's no way we can go back to the lows. Well, we could go back to the lows. I find it difficult to think we could break it, even though I think the economy goes down the toilet. Look, I've got a very variant perception here. I think inflation goes negative in 18 months' time. I think the price of oil comes down to $60. I think everybody's a supply side analyst and nobody understands demand. I think the ISM, which is the driver of the business cycle, or the best kind of monthly indicator of the business cycle, I think it comes down to about 40.35. So that's a kind of negative 2% GDP print, which I think the markets will ignore for the reasons I said before, and the fact that the euro-dollar market is already pricing cuts for January. I do think that we're talking now at turning point in the cycle, right? And everybody just always looks at where we are today. Inflation's at 8.5%. How can you possibly think the Fed will cut? Well, the Fed have cut every single time in history since 1960, when the ISM has gone through 50. They've either cut or paused. They only paused once, which was 2016. Every single other time they've cut. So they talk again, but growth leads inflation. I don't buy the structural inflation side of the story for this part of the down cycle. I can consider it for the next bull market and the next economic up cycle if we haven't built more supply in energy and some commodities such as copper. But copper's been screaming at you that inflation is not an issue. Every single commodity, from wheat to copper to aluminium to everything, is down 25 to 50%. It's only oil and gas, for the reasons we know. And I think oil comes down to $60 anyway. Now, year on year, that's going to give you negative 50% oil price. So the headline CPI is almost impossible to be positive because of the year on year comps. So I think, so to sum it up, bigger, faster recession. I don't think it impacts markets. I think, kind of as Kevin and Yurian think, I actually think markets are fine. I think the bond market does extremely well because it's utterly mispriced. It's the most mispriced of all the other assets versus the business cycle. So that's why I'm wearing my buy bonds, wear diamonds t-shirt. I don't disagree with Kevin that equities will do well. I just like the risk-adjusted return in bonds. I love bonds because they're easy ways to make money generally, because you only have to figure out two things.
And actually, we can pull the slide of the Head and Shoulders top on the 10-year. Yeah, that's a nice chart. Around now, we were talking about that earlier.
Yeah. So that's the Head and Shoulders on the US rates. What is that? The 10-year rate? Yeah, the 10-year and is that the 10-year rate? Right?
Yes. So 10-year nominal, 10-year real.
So as I showed you, my chart. Okay, so my chart was showing that we're back above the Head and Shoulders because rates have gone slightly up. So you can see my chart just shows that we're just a little bit above the neckline over there.
Okay, I think trend lines and necklines can be
tricky.
Can be overrun on a short-term basis. I wouldn't say that would disqualify the story.
But to go to Ran, I think the most important point is if I think of the asset allocation process, right, my view is weaker growth. My view is the Fed come into play, i.e. they stop somewhere set or op. I think the bond market rallies. What do you want to own? You want to own the furthest out duration thing you could possibly own, which is crypto, which is why crypto based exactly around the same time as the market starts picking up that the Fed were going to pivot. So this moment the Eurodollar market starts pricing in cuts, crypto bases. So that's how I think of the portfolio allocation. I love bonds. I think they'll do well. I don't want them for yield. I want them for price appreciation. But the real game in town is going to be crypto. Everybody in the entire financial world is short upside calls on crypto, right? What that means is the more the price goes up, the more regulation changes, the more they have to get involved. I've seen a setup once like this before, which was the launch of the GSCI Commodities Index back in the late 90s. And basically nobody had commodities in their portfolio. Everybody went to about 5 to 10% weighting, right? The amount of buying was in the hundreds of billions of dollars. The magnitude of what needs to happen here and the fact that everybody's short means that over time, they all get flushed in. And all the conversations I have are with the biggest financial institutions on earth, whether it's the sovereign wealth funds, the biggest asset management firms, the biggest family offices, the biggest pension funds. I mean, it's on everybody's radar screen. And incrementally, every bit of news you get that's positive on regulation, or somebody like BlackRock showing the way, or somebody like Texas Teachers showing the way, or somebody like Fidelity showing the way, makes people braver and braver. You know, when you look at what Goldman is doing, JP Morgan's doing, I mean, you're giving confidence to more people. All they need is a bit of price action and they'll be in. I totally agree. The point being is the big pools of capital, whether it's people like Apollo or Blackstone or BlackRock or everybody, sees yield, right? They didn't own gold because it didn't have a yield. And it's difficult for them because they have the hurdle rate we talked about before for so many of their clients. But it's a bigger story than that. It's much bigger than a supply and demand story. What we're actually creating is the benchmark interest rate for Web3. So this is the big daddy of which all risk will get priced against. Everything in the world is Treasuries plus or LIBOR plus, everything. Sure, in Europe, Italian spreads are Bunds plus. So we have an ability to now price risk. So how does this work? If I look at the Solana staking yield, which is higher than the expected ETH yield, once you adjust it for the volatility of the underlying currency, much as you would do with emerging market bonds, well, they match. So you've got pricing relativity. You can understand what's mispriced, what's not priced, where the risk actually lies. That creates an explosion in DeFi. Because once you have a proper yield curve, that you have and again, I'm going to use the term because people don't fucking understand it, is risk-free rate. The risk-free rate is the fact that the ETH yield will be guaranteed. What won't be guaranteed is the value of ETH. It's the same with the US dollar. If you buy US dollar bonds and you're a non-US investor, the bond yield will go, the currency will go up and down against you or in your favor. So this whole setup is much larger than anybody expects. If we want to see where DeFi goes, this is the big unlock. It's also the big unlock for institutions. It's the big unlock for pension funds, as long as Kevin said, regulation comes as well. This is a much larger impact than anything that's happened in this space since the launch of stable coins and the launch of Ethereum. That's how big it is to me. But it's not overnight, you need to buy it now, it's going to go up immediately. I'm talking about structurally, you know, as Kevin said, as regulation eases, as people understand and have clarity, this becomes a monstrous asset for this entire new financial world. Well, I'm max long, and I have been, and that has not changed, and I just keep adding. So that's ETH, Bitcoin, a few other tokens. I've got this fund of fund business, so invested in that across digital asset hedge funds to capture some of the alpha of the space. Look, it's getting a little bit overbought. I think, you know, if we're getting to trading tactics, whether we get a pullback soon or not, I think we rally into the ETH merge. I think it definitely happens. Whether it happens on the 15th, there's a story coming out that it might come out early. The 19th, it gets out of the way. As Kevin said, that removes some of the uncertainty of the space. Maybe that doesn't happen. You know, there's still a probability that something goes wrong. Then I think it's buy the rumor, sell the fact. It's a pretty standard market operation. You buy that pullback with both hands. For what Kevin's saying, for what I'm saying about rates, for what you're saying about network growth, any big pullback you get from here, there's going to be a bunch of people saying, wait for the new lows. I just don't think you wait for new lows. And my view on the Tornado Cash thing is, I've been saying for a long time, there needs to be a grand compromise between the regulators and the market participants. Gensler is one end. He wants to kill you, take all your money, put you in prison, and then shoot you. The other side is the libertarians from the Bitcoin community who want nobody to ever touch them in any way, in anything they do, right? Those two people have to meet in the middle. And what there is a compromise. And the compromise to reach regulation is stuff like Tornado Cash, whether you agree with it or not, it's part of that compromise. They say, we want a bit more control here. We want control over stablecoins here. You can do what you want with ETH and Bitcoin over there. And some way we reach something. So this is not the first, this is not going to be the only sacrifice in the game. And we'll fight it and scream about it. Maybe it goes through courts and they can't deem that code can be restricted in this way. But what they're trying to do is draw the lines. And we're all trying to draw the line to the other side. Somewhere we'll reach a reasonable enough compromise that, as Kevin says, allows everybody to operate. And there'll be other ones too. There'll be stuff in DeFi where they'll be saying, well, you don't know the KYC, right? They haven't done that one yet. They will do that. One of these DeFi protocols is really difficult because they're all DAOs. So they have to figure out how to do this. But somebody's going to get prosecuted there because they just want to make that statement is this good, that bad. And we're going to have to kind of find that agreement. Whether that goes through the courts or not, I don't know.
This is getting quite like...
If you can take every single Russian billionaire's wealth without any due process in any legal court in anywhere in the world, they don't really care about your Tornado Cash protocol.